We are doing this for many weeks now, and I'm finding good value addition in terms of uh, communicating with you guys. What do we feel about the market? Souradeep and myself has been taking this for a long time, and now that more and more experts are joining StockEdge Social, we also invite one of the experts to join uh, every Friday and talk about his or her own view on the market. So let me just quickly take this session. I'll take it for 15 minutes around, and then I'll request Souradeep to take it over from me, and then we will have other guests who is part of the StockEdge club to come and talk about his perspective about the market, where he see market is going. So I've been recording a lot of videos in the weekend sessions, as well as early morning. I've started this morning review for 1 minute, where I talk about what is happening in the market and what could potentially happen in the market. All right, so let me just quickly show you what I feel, what is happening in the market. So as I'm recording the videos on weekends, weekend strategy, so I'll be recording the same for tomorrow. So market is cheering this recovery because dollar index has corrected from 105 and it is trading below 105. Now, this recovery in the market, whether it is going to be a long-term sustainable recovery with a change in the trend, I am not sure. I think the market is just recovering. There is a fair bit of short position in the market, and there is a short covering which is happening in the market. In my video, I talked about this important zone, which is around 15,670 to 15,770. So this is a very important Lakshman Rekha zone. And I feel that if dollar starts trading above 105 again, this zone will act as a very important resistance, and market may continue its downfall. So the whole market is dependent on dollar, how it works, and dollar is dependent on two things. One is yield curve, absolutely, and the other is crude oil. So let's see what is happening in yield curve. So let's go to macro and let's go to yield curve. So what is happening in 10-year yield curve? Good point is that 10-year yield curve is also reversed from its top. This is a weekly data. I give extremely high importance to weekly data because typically the trend change happens on weekly data first, and and then the confirmation happens. This is 2-yearly yield curve, and this is 30-year US yield curve. So largely the yield curves are suggesting that markets should recover because they are trending down. And the most important commodities of all is the US oil, and US crude oil has corrected because there is talk of a settlement between Russia and Ukraine, and that's why overall every market is showing positive signal. So for next week, there is a clarity that if dollar index continues to go up, market will take a very strong resistance at these levels, and if dollar index starts going down and continue to go down, then possibly this level will get broken and we will see a good recovery in the market. But having said that, are we seeing market getting into a bullish territory? I think that can only be confirmed when market crosses 200-day moving average and this level. So this is 16,200, which is the previous swing high, and 200-day moving average, which is right here, which is around 16,600. So if I have to play aggressive momentum bullishness in market, I will wait for these levels. If I have to play short-term smaller swing positions in market, I am willing to take positions from here on after this breakout has happened, and I will keep on adding more positions as market keeps on crossing these important levels, which is 16,600 to 16,650. So this is that level which I am talking about. 200 moving average is 16,626, and this is that level जहां से market reverse किया था यहाँ पे. So 16,600 is extremely crucial, and immediate short-term up move will come in the market when market breaches this Lakshman Rekha. All right, this is, and the second thing which I discussed was this chart template. So last time when I attended this Friday session, I talked about this template, which is basically a trading view 4 chart template, which has 15-minute data of Nifty, Bank Nifty, Nifty mid cap, and small cap. So my idea is that in this 15-minute chart, I always try to find out the trend changes. And the trend change will only happen when all the four indices are showing similar kind of a pattern and there is a buildup of momentum in the form of RSI. So Nifty, Bank Nifty, mid cap index and small cap index all are showing strength right now, and the momentum is also on the higher side as far as 15-minute chart is concerned. So my biasness in the market is to remain positive. Other thing which I want to share with you is this Nifty Bank Nifty graph. Now, I 2-3 days ago in my morning session, I mentioned that Bank Nifty is looking stronger than Nifty. What was the logic of that conclusion? So if you see the strength of Bank Nifty, it has been much stronger than Nifty. And if I draw the ratio between Bank Nifty and Nifty, so this is the ratio between Bank Nifty and Nifty. So Bank Nifty divided by Nifty. So if you see the ratio, this ratio is kind of consolidating here, and it's ready for a breakout. And this ratio also is trading above its 200-day moving average. Okay, and most important, the relative strength of this ratio vis-a-vis the Nifty. This defines the strength of Bank Nifty vis-a-vis Nifty and the index strength vis-a-vis Nifty. So relative strength of this index is also higher than zero. So I think Bank Nifty in coming few days will continue to outperform Nifty. So one of the strategies which I have deployed in the market right now, I'm long Bank Nifty and I am short Nifty. And whenever I am seeing breakout in the market in short term, I cover up my Nifty, I carry my Bank Nifty's long positions, and whenever I see reversal in the market, I again hedge my position by selling Nifty. So this ratio between Bank Nifty and Nifty is a decently good ratio for people who want to keep position for a longer tenure. So index traders, you can look at this, you can use futures to trade this ratio, or you can also look at options to trade this ratio. Now, how do you identify stocks to trade the market? So, the best way to identify stocks to trade the market is to find out stocks which have momentum. So, and you know that I urge you all to look at combination scans, create your own combination scans. There are multiple combination scans you can create. There are some great outputs which we have produced, like in scans, we have developed the output like delivery scans, the VWAP scans. In fact, this is one amazing scan which we have. So on the stocks which are crossing above VWAP for last 2 days. So these are the stocks where there is fair bit of strength, because for the last 2 days they are closing above their VWAP for last 2 days. So what you can do is you can create your combinations, and I've explained this to you in a couple of videos. I'm going to repeat this. So you can create a combination and add VWAP as part of the combination. So say for example, on 23rd of June, which is yesterday, these were the stocks where there were high delivery, and these stocks closed above their previous 2 days VWAP. Okay, so Aditya Birla Sun Life. So let's see, it's a high deliver. So yesterday there was high delivery in this stock, and the closing price was above the previous VWAP. So this was the VWAP, this was the closing, this was the VWAP, this was the closing. So it closed almost around the VWAP of previous day. So ideally this stock should be strong for a few days unless we see that RS is also weak. So let's see what happened to this stock today. Okay, the stock was down, but the reason is RS was below zero. So also add stock where RS is greater than zero. So let's add in price scan, let's add RS stock where relative strength is increasing. Okay, so you will get the stocks where VWAP is also up, RS is also going up for the last 3 days, and delivery is also high. Now let's see the stock. So these are the stocks where there is interest. So let's see Imami. What happened to Imami? High delivery yesterday. VWAP, RS has also been increasing, and VWAP is very close. You see the VWAP is very close. So the stock is closing almost around VWAP of the day. So let's see what happened to the stock price. This is again flat, nothing much has happened in the stock. Let's go to other stock like IIFL Wealth. Delivery is high, increasing RS, and the VWAP is closing far higher than the closing price is far higher than the VWAP. So let's see the stock price movement. It is up by only 1.4%. If you look at the chart, this stock, although the trend is down, the RS is still minus 0.07. So I'll probably wait for RS to go above zero, then I will think of taking the position. So what I'm saying is that look out for combinations. There are multiple combinations which we have in our strategy section. So look out for combinations which you feel can give you momentum stocks, and ride those momentum stocks when there is a breakout in those stocks. Classic case would be, say, Blue Dart. Now let's see Blue Dart in our chart. So Blue Dart, let's see Blue Dart. Okay, so strong stock. This is a daily chart. This is a strong stock trading above moving averages and also showing pretty promising strength because the trend is up, and the stock is closing around the 52-week high zone. So this is last 52 weeks. So this is a strong stock. So one can think of building a momentum position or portfolio in this stock. So basically, the thought process is that use StockEdge to find out stocks where there could be momentum. Add these stocks as part of your watch list. So I have created multiple watch lists for my tracking purpose. For example, there are watch lists like FIPA, which is basically stocks where fundamental improvement is there, and these stocks are reasonably priced. Or I take an example of Mahindra Mahindra. This is one stock which I've been holding on for some time. Look at the strength this stock has shown, and even though market was falling here, this stock was strong and it continued its strength. So our role is to identify stocks where there is momentum and there is a possibility of them continuing with the momentum. But a small caveat: remember this Lakshman Rekha, and remember 16,600 is very important for going all in momentum buying. It's a good market for short-term actions, but a really bad market if you want to make big money from the market. So you have to keep on making small money with small stop loss if at all you want to participate in the market. If you can afford to not to participate in this market, my humble submission will be do not participate, because this market is right now very crazy, very uncertain, and wait for Nifty 200-day moving average to cross, and then convincingly start building your momentum portfolio once again. All right, so thank you so much. This is it from my side. I hope it was useful. I will keep on recording videos to help you guys, and feel free to connect with me if you're a TMP participant on WhatsApp. If you're a StockEdge club member, feel free to connect with me over social.stockedge.com. I am very active there. I do post ideas whenever I feel I should post idea. So do visit me here and keep on asking me questions if you have any. And last and not the least, if you are a premium member of StockEdge, do subscribe to StockEdge Social or StockEdge Club. These are really good products which will help you for real-time guidance from us. Thank you so much. I would request Souradeep to come over and take it over from me.
Hi, thank you, sir. Thank you, Vivek, sir, for the wonderful presentation. Hi,
Thank you, Souradeep.
everyone. Uh, uh, welcome, sir. So, hi, everyone. Can you see my screen? Can you see my screen? Thanks. Now, what I want to mention here is that I want to show you how market has behaved based on the days of Fed. So this was the Fed meeting. Well, this is the US Dow Jones, and why I am looking at the US charts is that US market is driving the globe market right now. Now, a very important thing that I want to mention here is that this is the how the on the 5th May the Fed hiked the interest rate by 50 basis points. What happened after that? Market came down for quite some time. So then there was a doji formation. Market went here on the upside on 33,000, expecting that Fed won't hike that much. But what happened here is that Fed actually did hike, and 75. And before that, they understood that the rally was overdone, and obviously the sell-off took place. Just and see the ferocity of sell-off from 33,000 to uh, 30,300 in 3 sessions, 2,800 point in Dow in 3 sessions, and 700-800 point more it fell over it. Next, and this was the Fed policy. Now, as the Fed policy is over, what Fed has done here is that it has raised interest rate by 50 basis point here and 75 basis point here. Now, for now, this region in Dow, that is almost, you can say, 31,000 is a kind of a resistance. Once Dow passes over 31,000, we may see a good amount of rally in this also, and in all the global indices also, right? Now, at this point, I want to mention one very important and significant thing is that, see, simply put, if you see, this was the 50 basis point high, and this was the 75 basis point high. Now, this high, the effect of this is into the system, all more or less, and the impact of this high is yet to be in the system. Now, let us see what it has cost. Now, all of you know about the PMI data, right? That is the Purchasing Manager Index. Okay. Now, US interest rates hike have impact on everywhere in the world, and see from the previous month's 58.3 PMI has dropped to 54.4, 57.6 was the expectation. From 57, French composite PMI has dropped to 52.8. From 54.6, it has dropped to 51, the manufacturing PMI. Look at Germany. From 54.8, the manufacturing PMI has dropped to 52. From 53.7, composite PMI has dropped to 51.3, and service PMI from 55 has dropped to 52.4. Very bad. And the expectations were quite higher than that. Now, if you see the S&P Global 54, this is the Eurozone total, from 54.8 to 50, composite PMI 51.9. So everywhere the same scene, from 54, 56, it has dropped 2 basis, 3 basis point. And look at the US data. These are professional PMIs. Service PMI from 53.4, 51.6. Manufacturing PMI from 57 to 52.4. So simply the economy is slowing down. And remember, in the first quarter, US economy actually slowed down, right? Now, US economy is actually slowing down at this point of time. And it is very important for us actually to remember that right now what we can see that this hike is not into the system. This hike would be into the system when next month's data will come around 22nd, 23rd. Okay. So by that time, the economy, these PMIs, which are when below 50, they show recession or contraction in the economy. So possibly by next time when the 75 basis point rate hike impact into the system, you may possibly see that they entering into recession. Now, as soon as the data came, you can see the Dow jumped, and today it is jumping. So basically, market is on wait, looking for a steroid, and market doesn't want the Fed to hike the rate. Now, Fed has said that they can again raise 75 basis point rate next, but as long as see, next meeting is on 26th July. Now, so 27 July, the result will come. So what Dow can do possibly right now, it can come to this 32,000 level. 32,000 is an important level, as you can see earlier. So it can come to this 32, 33. If it stays above 31,000, it can come to this level, and then again, as the policy get announced, it can drop. Or what it can do is that it can, if it does not crosses this level, it can remain very subdued. Now, my point is simply that, see, look at this. If you look at the global commodity prices, see, this is the wheat prices. Okay, so wheat prices have come down a lot, from top 30,000 to 96, 30% fall it, you can say, or 25%. Corn prices have not fallen a lot. So corn prices are above normal. Soybean prices have come down a bit, but still quite above the normal price level, almost double. Rice prices are also 30% higher than normal. Only thing that has collapsed is the cotton prices. Okay, you can see sugar prices are also relatively on the higher level only. Of the industrial commodities, you can see copper prices has really fallen. Now, if this fall is due to slowing down of the economy or interest rate, it is very difficult to predict. Possibly it is higher interest rate and slowing down of the economy both. You can see zinc prices, this is the crude oil prices has fallen a little bit. Lead prices, iron prices, everything has started falling. So the economy is probably going into recession and rates are also going to rise. Now, most of you have home loans. A lot of, if not most, a lot of you have home loans. Tell me, do you have, right? A lot of you will be having home loan. Now, if you are having a home loan, a lot of you, if you are having a 1 CR or 2 CR home loan, uh, by the time, and Fed is selling that they will lift the rate to 3%. Now, from 0.5% to 3%, if the rate is hiked from 0.5% to 3%, rate is hiked in a small period of time. What will happen if within a small period of time rate is hiked from 0.5% to 3%? What will happen? The outflow of the for everyone's pocket will go up, of the home buyers pocket will go up, the outflow, the monthly EMIs will go up in a huge manner. In that case, there will be a serious amount of contraction uh, in the market. Okay, so this is the way to put it. For you, more than Nifty, the more important thing to watch is for Dow. If Dow stays above 31,000, you have to go long in Nifty. If Dow stays below this, there is no point going long in Nifty. I will come to the chart. Okay. This is the Nifty chart. As simple as this, as I was telling, that market gives very directional move for a few days, and then it goes in a long kind of consolidation. These are Elliott waves. I am not going into wave theory. You can watch this phenomenon earlier also. If you look at this, so see this zone of this zone. If you look at gap ups and gap down in a range bound activity, and you can look at so, and at the same time you can look at, just a second, directional moves like this, isn't it? Directional move and direction. So in my belief, we are presently possibly within another move like this. Okay, another move like this. Only if we stay above uh, 15,900 or 15,880, possibly only then we can go up in the Nifty. And if we stay below 15,880, possibly we will fall much, 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 much more. In the case of Bank Nifty, 33,800 is the Lakshman Rekha. If it stays above this, I would advocate going long into it with a target of maybe 35,200, 300, going long into it. But if, as long as it stays below 35,800, I would think that this range to be remain intact, and market will probably stay within this range, 33,800 to 32,300. So this is the important range. Above this, you go buy, and within this, try to sell options. Okay, this is all about it. Any questions? Mm. Yes, houses, exactly, Pradeep Kumarji. EMIs have started increasing a lot, like almost 100 basis point EMIs have gone up, 90 basis point. And if Fed increases 125 basis point more, believe me, RBI won't stay behind. And RBI will, to preserve the currency, RBI will raise rate, and you will see market reacting to that. This is the macro thing. Also, I wanted to show another macro thing, because Vivek sir discussed so much about the market technicals and the US bond yields. I am not going into that because then it would be repetitive, and that is why I am showing something different. I am showing a little bit of a macro data. That is why, because Nifty, Mac Nifty, dollar index, everything, Vivek sir has given a very, like, uh, what I 360 view of that, and I think you have uh, you have understood the levels that are important. I will just like to show you one more important thing here. See, Indian Forex Reserve has started going down again due to this high oil prices. Uh, if I show you 1 year view, you will not even 1 year. I want to see a very small time frame view. Okay, so you can see that from it went down to 593, then it was falling. Earlier it was falling. Okay, it was in the tune of 640s. Okay, in the December, earlier it was falling, and uh, it went to 593, the lowest, and then it started uh, rising again, and last 2 weeks it has been falling, and it has fallen sharply. So you can see things actually turning bad, and uh, everything will depend on the Dow. If Dow stays above this 31,000, we will have to go long. If Dow stays below this, we have to go short. That is the option right now. Only options we have as analysts to give a view, or as a traders you will be doing. But only if it goes above 31,000, you will Dow, you will have to go long in it. If Dow stays below this, then you have to play for the range bound market. Market won't fall a lot possibly before next Fed meet, because see, every economic data is going to come bad, and market is going to put his hope on every bad data that Fed won't be harsh on the market. So thanks. I will invite my next speaker. Hi sir, can you hear me? And Agnish, can you please transfer the screen to him?
Hello, can everyone hear me? Okay. Uh, so hi everyone, this is Nikhil Gangal. So what I'm going to discuss today is about how a lot of stocks that are being considered as an opportunity in this fall can be actually traps, and there are a lot of opportunities also we will discuss at the end. So I'm talking to a lot of people, and uh, the retail investors, what they are interested in investing. Basically, first of all, this session is about investing. I'm not a trader, so I'll be talking about long-term investing in this one. And so a lot of people who I am talking to nowadays, they are more interested in investing in the companies, mostly in those companies which has given 6x, 7x in last 2 to 3 years, and that has corrected 20, 30%, 40% in last 4 to 5 months. Now they have a perception that since the company's financials are already doing great and they have given 6x, 7x, if the stock has corrected 20, 30%, if they invest here, there may be possibility to make more 4, 5x, 6x from here. Now, I think as a cyclical investor, I think there may be a lot of traps there. Maybe out of 20, 2, 3, maybe become 4, 5x from there. But I think the risk reward ratio is purely basically a trap for retail investors. So I'll try to explain that from my perspective. First of all, the people who don't understand, who are not familiar with our understanding of cyclicality of the market. Let me give you a brief. I have talked about it in detail in my videos, in my face-to-face video, in other videos also. You can go and search those videos. But I'll give you just 2 minutes brief before we talk about traps and opportunities. I'll just look at the questions. Okay, so all people can hear me. So I'll just give you a brief about our understanding of cyclicality. So our understanding of cyclicality says that the stock price of any assets of any stock market are predominantly dependent on, there are 3 cycles basically: economic cycle, business cycle, and sentimental cycle. And the composition of those cycles, the superimposition, the overall overlap of those cycles make and can break your stock price. So economic cycle is nothing but the country's condition in economy, how it is going forward. And you don't have to be economist to understand that our company is in growth mode for last 20, 30 years. So you can see a straight line. It is actually not a straight line, it is a sinusoidal curve. But since it's a decadal thing, the country's growth, so you can consider it as a straight line. Now the second comes the sectoral cycle. So the business cycle is a subtle cycle. Some businesses have cycle for 5 years, 6 years, 8 years, like real estate has a cycle of 10 years, 15 years, and some sectors have cycle of 4 years, 5 years. So in those cycle, what happens is, you can briefly, I should say that those businesses go from boom to bust or bust to boom. So businesses make a lot of money, and then things change, business do not do great, and then they again do good. So basically this is a up and down cycle every business go through. And after that, there is a cycle of sentimental cycle. This is basically bull bear phase. Given the same fundamentals also, you have seen that the annual reports come once in a year, but the stock price goes minus 20% to 20%, minus 30% to plus 30% every year, twice a year. And when you give the superimposition, do the superimposition of these cycles, you get the stock price. So in order to make big money, what you have to do is, so you cannot do anything about the economical cycle, but you have to get the business cycle right, and you have to get the sentimental cycle. You have to take the benefit of the sentimental cycle. So if I get the business cycle right to some accuracy, and if I know that sentimental cycle right now, bearish phase is going on, if I can take advantage of that, so I can catch this reason. And when I can catch this reason, the probability of multi-bagger happening tenfolds. And not just the probability of multi-bagger happening, but the opportunity size also increases. If I am able to get this reason, this is what I call minimum intrinsic value of the company. So the probability and the opportunity size both increases, and the probability to get multifold returns also increased. So basically what we call it minimum intrinsic value and maximum intrinsic value. What we do is we reverse engineer the stock price into economic cycle, business cycle, and sentimental cycle, and try to calculate this reason, so that when the next bull market comes, we can do great and we can beat the market. We can do better than the rest. So so given this brief, I'll tell you what traps I feel are in the markets. So as you can see, uh, here the industry cycle is at top and the sentimental cycle is also at top. So the stock price is at top and the industry cycle is at bottom and the sentimental cycle is also at bottom. So the stock price is also at bottom. So I call it minimum intrinsic value and I call this one maximum intrinsic value. So whenever I talk to people, coming back to that, they are more interested in investing in IT companies, specialty chemical companies, and API companies like Laurus Labs, and some are interested in buying sale, which has worked 5x. And uh, this is why I am against it. Why? Because their industry cycle has already worked. Now I don't know, I cannot predict that whether the industry cycle has stopped or not, but the industry cycle has definitely worked. It can be here or it can be here. Now the sentimental cycle as we are seeing right now is, let's say it is in bottom. So most probably you are buying those stocks here. This is the zone. You can see it, right? So if I superimpose this one, the one near one, it comes here. And after two, it comes here. So either you are buying here or you are buying here. So if you are if you are thinking about long-term investing, the risk reward is very negligible, you can see, and this is your opportunity size. It may take 6 to 7 years just to recover your money, or you may make some money in if you are trading, you may make some money in early days, but you can lose a lot of money in upcoming years. So this, I will share some examples with you. I saw this same pattern in 2015. I saw the same pattern in 2018 also. So I'm opening Tata Motors right now. Now the 10-year chart, I will show the maximum chart to you. Now the Tata Motors became 20x and 30x in just 6 years, from 2009 to 2015. 20x or 30x nearly. And when it corrected 20, 30%, 40%, the retail investors were way more than happy to buy this stock because they had this perception, since it has become 20x from here, if we buy it here, it will become 20x from here also. Now, as you can see, it is exactly like this. See, two tops and then bottom. Two tops and then bottom. So as you can see, it's been 7 years so far, and there has been no returns so far in the Tata Motors. I'll go for another one more company called Cupid. Cupid also gives some 30x in 2 to 3 years, from 2014 to 2015 and 16. It gave 30 to 40x, and people were more than happy to buy it here at 2016 when it corrected 30-40%. And you can see from 2016 to 2022, there has been no returns. I'll give you one more example of 2018. Same thing happened in 2018. KRBL stock became 30x in less than 3 to 4 years. And when it corrected 30-40%, people were more than happy to buy this company. So these were the hot stocks basically that time. And now I will show you Infosys. Infosys is doing the exactly same thing right now. And people are happy to buy this company because they think that since this stock has become 4-5x in last 2 years, and it has corrected 30%, so it has become a value buy. I would not suggest it as a value buy, and in fact, I would call it a trap. Not just Infosys. Look at Deepak Nitrite. Same story. Since it has corrected 20-30%, people are thinking since it has become 5-7x in the last 2 years, it will continue to become 5-7x from here also. Same goes for Laurus Lab. Since it has become 5-6-7x in last 2 to 3 years, retail investors are thinking that it may become 6-7x from here also, and they are consolidating. And we don't know whether this is the top or not, but we definitely know for sure that the risk reward is not very favorable in this area. So what I think is, this is why you should stay away from these sectors which have given 6-7x in last 2 to 3 years. Some of the sectors are steel, some of the sectors are specialty chemicals, IT, and API companies also. Somebody asked me a question. I was talking about a company called KRBL on the StockEdge social, and somebody asked me that the fundamentals, what it is showing, the company is showing right now, it was showing in 2017 and 18 also. So why? What was the reason why should not be invested in 2017, and why we should invest now? So what is that trigger point basically? Why we should invest in that? So you can see the P by E ratio. So if you can see the P by E ratio, it was all-time high. If you look at the 10-year P by E ratio of KRBL that time, it was at all-time high. So, and the same thing if you do Infosys also right now, the P by E ratio of 10 years is all-time high. If you look at, let's look at Laurus Labs also. Maybe it is also high, but it's not that high, but you can see it's on the top layer of the P by E ratio. So these are one of the reasons, if you are investing in some company, then at least watch for historical valuation of the company. So that will be a good call before investing. Since we have talked about the traps, we should talk about the opportunities also. So there are some sectors which have not given any returns for last 6-7 years, and the fundamentals continue to do great. Like one of the companies, KRBL, I just showed you. I keep sharing those companies on my StockEdge social account also. But some of the sectors which if I talk about right now to grab those companies will be real estate, engineering and infra, tobacco companies, media and entertainment, and pharma. I would say that generic pharma sector has been very much undervalued for last 6-7 years, and it continues to do well. I mean, financially, these companies continues to do well, but they are undervalued because of the sentiments, because of the market cycle. And once their upcycle comes, I think those will be the opportunities where the multi-baggers will happen. One more sector is their banking sector, like HDFC Bank and HDFC. They are also undervalued. So we don't know whether it's the bottom for them or not. We don't know whether it's top for IT companies or not. But it would be better to go for the companies where the risk reward is in our favor, where the margin of safety is available, so that the loss will be minimum and the profit will be maximum. As Monish Pabrai says, value investing is basically heads I win, tail I don't lose much. So this is what we have to focus on in this market. So in this correction, if you do this kind of exercise, I think it will be very helpful for you. If you have any question, you can please ask. Okay, so what is the time frame? I don't think this is question for me. Uh, Infosys is not a value stock. Yes, it's not. It's a growth stock right now. I would suggest that the risk reward is definitely not in favor. Chaman, Tata Steel. Yes, Tata Steel is a tricky case. That's a very good question. So, uh, if you look at Tata Steel and if you look at the P by E ratio also, it has uh, historically lowest P by E ratio right now. But since I believe in cycles, and if you understand little about cyclical investing, I would say that the cycle of steel sector, I would not say that it has completed, but it has, like I would say 75-80% has completed. And whatever the price had to happen, it had happened. It has happened. Like it gave from 200 to 1400. So like 6x, 7x, it has already given. So I would say the cycle of steel is almost over, even though the P by E ratio is at historically low. So this is a tricky one. Same goes for sale. So sale also P by E ratio is at historically low. But I would say that the steel cycle is over. So my logic is behind is, so P by E ratio is nothing but price divided by earning. And if you look at the historical earning, these companies are having their all-time high earnings right now. And because that may be because the commodity price rise, which we saw in 2021, or China plus one thing. But whatever it is that they have seen some exceptional earnings, and because of that, the P by E ratio is all-time low. And this is why I understand that the cycle of steel sector has already over peaked. So risk reward ratio is not favorable. So I would not put my money on that. So I have already Sarabjit Kaur, I have already suggested some sectors which you can look into. Sequent is also a great example. Yes, DMart in this case, Anmol Pandya, DMart in this case. DMart, I had already told in 2020 itself that I'm not going to invest. Good analysis, Mr. Mukesh Gupta. Good analysis. Please suggest some stocks which seem value buying from here. Yes, you can follow me on StockEdge Social. We have a small case also. You can look for that, and we keep suggesting those on StockEdge Social itself. Which sectors do you recommend now? I have already recommended as such TVS Motors. The auto cycle has come. I think auto cycle will do well. What about companies like CDSL? The CDSL valuations have already taken care of the fundamentals which it is going to give for next 2 to 3 years. So it is overvalued. Can you help with real estate sector chart? Real estate has worked so far, and I think there is still an opportunity there in real estate. If you look at good companies, one of the companies I have invested in Marathon Next Gen, I had invested at 56 rupees, so I had a great amount of margin of safety. But if I get any real estate stock, I will share it on StockEdge Social. What about SBI? SBI, I entered, I exited nearly 500 something. Nikhil, how do you look at opportunities then? Aman Bhandari. Uh, I think I covered that part. Okay. What can be trigger point here is for the opportunities of question Mr. Aman Bhandari has asked. Uh, you can look for the sectors that has not performed in last 6-7 years. Second, you can look for the sectors which are undervalued. So this should be your trigger point. This should be your starting point of your analysis. And after that, you can go ahead. TVS Motors, I have covered. Good analysis. Please suggest some stocks. Okay, I keep suggesting on StockEdge social. Prep part I understood. Okay, thank you. Auto sector. Auto sector will work. Margin of safety for sectors and stocks. So when the how to know margin of safety for sector and stock, Shivam Giri. So when the stock has not performed for last 6-7 years and the financials are keep in getting better every day, this itself is a margin of safety. What I do is we calculate minimum intrinsic value and maximum intrinsic value of an stock based on the fundamentals. I skipped that part. So I told you that we reverse engineer the stock price into economical cycle, into industry cycle, and sentimental cycle, and we try to calculate these these zones basically, and we call those zones or those price maximum intrinsic value and minimum intrinsic value of the company. And this is what minimum intrinsic value and maximum intrinsic value looks like. So each and every year we calculate minimum and maximum intrinsic value for the companies. So you can see minimum intrinsic value, maximum intrinsic value, minimum intrinsic value, maximum intrinsic value. So every year we calculate minimum intrinsic value and maximum intrinsic value, and it's very simple when it comes to. It makes decision making simple when it comes to buying or selling. So it comes to buy minimum intrinsic value, you buy. It comes to maximum intrinsic value, you sell. But I gave you one more uh, way to do this, to look at historical valuations of the company, look at historical P by E ratios of the company. You can do by that also. But there will be some tricks there, like I showed you Tata Steel. For that, you have to have little understanding of cycles, how they work, and you have to have little common sense that that P by E ratio is nothing but P by E. So if the earnings have already worked so far and some company has exceptional earnings, you cannot actually rely on P by E ratio. So Anil Saxena, which sector do you recommend? I have already told. Anjan Neogi, HCL, ARC, Oro Pharma. Okay, I do not track these companies, but if I do, I will talk to you. I will talk about them on our platform. Please share your view. Okay, I have already shared. Mr. Sunil Patel, please share view on XLS service. I do not track this company, but if I track, I will talk about it on StockEdge platform or by Twitter platform. Mukesh Asnani, sectors which you feel are bullish. Okay, covered. What about L&T? Infrastructure sector and construction sector will do good. That is what I believe in for next 2 to 3 years. We have companies like PSP projects. We have companies like Indian Hume Pipe and GPIL. Some of the companies at very great margin of safety and good fundamentals. We have already bought those companies. Auto sector, auto industry, Tata Motors. Tata Motors, I bought at 70 rupee because there was a great margin of safety, and it is fairly valued. I would not say it is overvalued, but since I got other opportunities, so I exited from Tata Motors and I bought those companies. What are the tools that you can use to check potential multi-baggers? I just told you the methodology. You can go from that methods. What about auto company? What about sale? I think I covered sale. Engineering India Limited. I hold Engineering India. I think it's a great engineering company and great margin of safety. But that tag of government company is there, so it will work when it will work. But I do hold. Solar industry. You mean the you mean this power generation, next gen power generation. I think it has already worked and the stocks are already overvalued. How does one do this analysis for a sector? I have already told that if the sector has not worked for 6-7 years, the stock prices have not worked. You can start from there. and you can look for the fundamentals of the company. And okay, so I think after this, all the questions are getting repeated. Uh, but I will read all the questions so that I do not miss it. What's your view on Tata Motors, Titan, Engineering India? How to know any sector cycle is coming? Yeah, this is a very good question. How to know any sector cycle is coming? You cannot know. We cannot know whether the sectoral cycle is coming, but we can definitely know what sectors are in their down cycle. So basically, you only know the past and the present. So you only know that we are in this zone. You never know how much time it will take to go for upcycle. It may be 1 year, it may be 2 years, it may be 3 years before the stock takes off. So this is one thing. This is one thing that we have to, I mean, look at. And this is why value investing takes little time. But when the stock starts performing, they become 2x, 3x in very less time. On a cursory look, how do we perceive a stock as per your analysis? PE returns a few years and ETC auto qualified for your analysis. Haven't it moved for past 5, 6 years? Okay, I can understand this question. Okay, are you asking that Tushar Shrotriya, that does auto industry qualify for this analysis? Yes, auto has not given good returns, but you can go for stock by stock and look for the opportunities in stocks. TVS Motors, Indian metal industry, a trigger cycle. I have already told the steel and the aluminum, the commodity prices have gone so much up, and those cycles have already worked. I don't know whether it's the top or not, but I think the risk reward is already gone. So I will not invest my own money into those companies. Hardik Gohil says that near bottom PE is the best investment in chart. In some cases, yes. In some cases, not. As I showed you the commodity companies chart, SAIL and Tata Steel. So basically, whenever you are looking at PE analysis, you have to look at the E chart also. So this becomes very tricky sometimes. Sometimes what companies do is they show a lot of other incomes, and this happens a lot in micro caps and penny caps and mid caps also. They show a lot of other incomes, and the P by E ratio reaches to 4 or 5 when actually they are the companies are overvalued. So you have to be little. Uh, you have to keep your eyes and ears open for that. Okay, some are asking for recommendation. I will tell you that I keep sharing my insights on StockEdge Social, and I keep sharing my insights on my Twitter. You can check out my Twitter ID also. And so this is my Twitter ID. I keep sharing my ideas here also, and StockEdge Social also. This is the website. I keep sharing my blogs here. So please visit there. Okay, what about cash-rich companies for investment? Abhijit Paul. Okay, so what do you mean by cash-rich? If you mean cash, the question is what about cash-rich companies for investment? So if you're talking about cash more than the market cap, yes, it can be very good strategy, and I also follow this. But there are some opportunities and there are some traps also. In every opportunity, there are some traps also. Sometimes they will show more cash, but they will have debt more than the cash itself. So instead of cash, you look at the enterprise value of the company, because enterprise value is equal to market cap plus cash market cap plus debt minus cash. So the debt will be taken care by the enterprise value. So yes, cash-rich companies are good investments, but the valuation is the key here. That is what we are understanding. HDFC Bank, yes, HDFC Bank is very much undervalued. Not sure whether it's the bottom or not, but near 2000 rupees, I would suggest to buy. Many experts said steel in multi-decadal bull run. What has changed suddenly? I don't know, sir, what it has changed, but I would not invest in steel right now. I mean, if you have invested at like 4x, 5x before, you can keep investing, you can hold your stocks. But if you are saying that to invest fresh in those stocks, I would not suggest. TCS, HDFC, Asian Times. Okay, so all the stocks related, you can ask me on the StockEdge social or on my Twitter account. But I'll just explain all the doubts which are related to the presentation that I gave. Okay, somebody has asked how to get your small case. Okay, I don't think that is the right forum. You can go to my website and look for what you are seeking. Sir, can you please tell me what are the parameters considered an investment? You can go to my website and there's one blog on the stock pickers. Let me just stock picking, intrinsic value stock picking. This will answer your questions. This will answer the parameters about what are the parameters to be considered. Hotel industry, yes, thank you. Thank you for reminding. Hotel industry is one of the industry that you can find opportunities. Amar Bhandari has asked that can you please explain minimum and maximum intrinsic value taking any stocks and as an example. It's a mathematical model, more of a mental model, but we do have to put the values and then the minimum and maximum intrinsic value comes. But I have given you uh, the alternative form, which is the historical valuations that you can do. So basically, I'll tell you the concept behind it. It is nothing but the historical valuations plus the economic cycle plus the uh, ups and downs of the sentimental cycle, basically. So if you know that sentimental cycle is minus 20%, so the model will take care of that minus 20%. The country has grown for economic cycle has grown for 6-7%. The model will take care of that, and company's historical valuation. So these are the three things that are taken care and calculated the maximum and minimum intrinsic values. Zydus Life, yes, it's a good company. We have given some stock recommendation. I think we have given on this StockEdge also. So all the stock related questions I will answer on StockEdge itself. Okay, what about HDFC Bank? Can you walk through one stock from bullish sector, media, company? Okay, how to hedge different sectors in portfolio? So what I do is I invest 3 to 4 per. So Saurabh Oja has asked how to hedge different sectors in portfolio like metal versus auto versus oil etc. So what I do is I invest 3% in each and every company, and I make sure I buy 2 to 3 companies in one sector. So I can increase my holdings from 3% to 5% on 7% also, and not more than 7%. So this is how I hedge my portfolio, and there are different opportunities at different time, and there are always 4 or 5 sectors which are undervalued. So it's more about how much stones you have turned basically. Finance sector, please. Yes, some of the NBFCs are very much undervalued. I just told about HDFC and HDFC Bank, and Others, in others, we have invested in one company called L&T Financial Holding also. That was very much undervalued, and we invested. And after just 7 8 days, L&T itself invested in that company. The price that we have invested is nearly to the current market price only. So we are not invested from very small price. Which stock is good in specialty chemicals? As I told you, I find the specialty chemical itself as a overvalued sector. So if the sector itself is overvalued, then I will not look for the opportunities in that sector. There may be one or two companies, but I will not look for it because it's time consuming. I will put my time into the sectors which are already undervalued, so I can get the multi-bagger opportunities there. ITC, I already talked about tobacco companies. So tobacco companies are undervalued. ITC, GST. Paper sector has already worked. Alcohol, I think it will continue to do well. So I think all the questions I think I have already covered. Zydus Wellness is one of the companies that we have not recommended, but it's in our tracking list. In maybe 7 8 days, next correction, maybe. Okay, so questions are keep coming, but you can ask me questions on StockEdge Social itself or my Twitter ID. It's better to close this session for now. Thanks for a great response, and uh, keep connected. And so thank you very much.